Hi, good morning or good day. It's Monday, 5th of November 2018. Welcome to our global series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market swing, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our global web pages, for example, admiralmarkets.com, and you will find the long version there. Also, if you're in the European Union, you will find the information and different offers for retail clients and professional clients. Sometimes the picture shows more than 1,000 words. 2 prominent examples, DAX 30 or also Euro Dollar. The margin requirements in the European Union is quite different if you're a retail client or professional client. If you are a high professional trader, you can apply for this professional client status if you met the criteria. Retail clients in the European Union still have a big benefit, unlimited protection against negative balances. That's not given by the regulation for professional clients. But some brokers, and of course Admiral Markets is one of them, offers an additional protection. We call that negative balance protection policy. Here also professional clients will get a protection up to 50,000 British pounds, what is around about 70,000 euro. All details and all more information via that link, what is displayed on your screens. This is me. My name is Jens. My English, made in Germany. We are a big international Forex and CFD broker. We have 18 country offices around the world, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, it's Marco's Day. On Friday, it's Dirk's Day. Our leading day traders live every business day, every trading day to the same time. And doesn't matter if you are in Australia or Europe or retail client, professional client, anybody gets the same spreads and commission. For example, no commission for DAX 30 and Euro Dollar, but great spreads, just 0.8 points or pips during main trading hours. Check it out, for example, on admiralmarkets.com. Like said, one world, global offers. You can check what we are offering in the European Union or Australia or what we are doing in Chile or wherever we are. Global business, a global player for your trading. Enough on my side. Now it's time for Jay. Good morning. Good day, Jay. What's your view to the markets today?
Hey, good morning, Jens. Good morning, traders. First, mic check. Can you guys hear me? Are we good to go?
Yes, all once.
Okay, excellent. All right, super. Thank you, Bob. Thank you, guys. Welcome home. Monday morning, another week, another dollar. Let's make some money. All right. First off, before we dive right into it, disclaimers in full effect. Let's have a look at the trade from last week. I was looking to long the dollar. Sorry, guys. My mic just tanked. Longing the dollar versus the Swissy, and we had nothing but crappy economic news out of Switzerland. So the trade started working out really well, but it's still in effect. It's still open. I still got it on the books. So this is the second roundabout for me. And the important thing is that once we hit that high, slightly above parity, we saw a lot of institutional sellers coming in. But now we saw a lot of institutional buyers a few hours ago, i.e. end of towards last week, coming into the market as well. We're currently at fair value, so we'll have to see how the dollar is developing given the midterms on Tuesday. And Nico's already asking a question. I'll get to that towards the end of the webinar. Slight risk off sentiment this morning. Why? Friday, Trump tweeted and let us know that he would be up for a US-China trade deal if it was a good one. Unfortunately, NEC's Kudlow then was very pessimistic, and the risk-off sentiment creeped into China. Obviously, also after Apple numbers, the stock dropped 7%, so we currently have a little bit of a risk-off sentiment in the market. Asian equities are, so to speak, red. We have Australia minus 0.5%, Nikkei minus 1.5%. We had a big one dropping 10%. They are one of the majors. We had Shanghai minus 1 and Hang Seng minus 2.4, although President Xi came on the hood and said that the government will step in and support the markets. Unfortunately, we had very weak, slightly weak, weaker than expected Caixin Services and Composite PMI, the weakest since September 17 and June 16, respectively. So Obviously, I am not a big fan of longing the Aussie dollar given the weakness in the market over in China. Reports were denied overnight, and this morning that Prime Minister May over in the UK secured a private concession from Brussels that would keep, attention, Britain in the customs union. Of course, my number one scenario, which I always said from day one, I don't see the Brexit, but hey, who knows, maybe the Brexit will come. Over the weekend, we had 70% of influential business leaders asking the government for a second referendum and a vote in the final deal. So this is not over. The problem right now is everything is settled on the financial services industry. So expect equity, apartments in Frankfurt to potentially drop in price a little bit again because all the Brexit bankers are not coming. All stays as is for now. Although the banks over here continue to hire, headhunters keep calling. Crude is below 63. Why? Today is November 5th. He or she who listens to us on a regular basis knows last night the sanctions versus Iran went into effect. And if you remember the last futures contract, not the current one, the last one, we had a very bullish contract because of the Iranian sanctions getting priced into the market, i.e. supply issues. But now we have 8 different exemptions coming out of these sanctions that are not being put onto 8 different countries. So that continues to be a weak contract. The current WTI contract, I want to trade out of a short perspective, not a long perspective. Also of note, on Friday, we had better than expected non-farm payrolls. That leads the market to expect more rate hikes out of the Fed. The December rate hike probability went above 70%. In fact, if you add 1 and 2 rate hikes together, you're at 77.5% probability for hiking in December. The 30-year, we had a strong sell-off in the long end of the treasuries. The 30-year hit the highest in terms of yield since mid-2014. So there's some inflation expectations coming in. And thank you, Dees, for posting it to my traders. We had PMIs out of the US. And if you look through the qualitative statements, it said nothing but input costs. Tariffs are raising our costs, especially hard hit the steel sector, obviously, and lumber is getting hit hard. Overnight picture, messy picture. If you look at what happened last week, that's the upper right-hand corner, we can see that Aussie dollar, New Zealand dollar, and the British pound saw some strength versus Swissy and Japanese yen weakness. I played the Swissy weakness. It was crystal clear on Monday that that's what I wanted to be short all throughout the week. Risk events, I don't know if we have time to do it live. Let me see, maybe we do. Let's go through it real quick. Although I did prepare slides for us.
So just some, yeah,
sorry.
Turkish Finance Minister Al-Bayrak said,
we don't care about the Turkish Finance Minister right now. Turkey is doomed. Okay, here we go. So Monday, what's important on Monday? We have the Bank of Japan minutes, or we had, they are hinting at a normalization of the yield curve, and the yen did nothing. We did see some activity, some demand for Japanese government bonds in the overnight session due to the risk-off sentiment. But very interesting that the yen did not come off significantly based on the minutes. Then we had Caixin Services PMI, as I alluded to, came in really weak. You can see it right here. Then we had Centex coming in weaker than expected. Not good. Germany not heading in the right direction. The IFO Institute last week already stated that. Unfortunately, we are on hold in terms of GDP growth. We have Polo speaking. That's of importance to us later on. And then obviously we have ISM non-manufacturing PMI over in the States, expected to come in a little bit weaker, but we still have very solid level readings way beyond 50, which is contraction level. 48 to 50 is where we start playing equities from the short side. Tuesday, we have US midterm elections. Then we have the RBA interest rate decision. We'll talk about that in detail. We have Eurozone market composite and services PMI in terms of the final reading. There's always 3 readings on that. And then we have the US JOLTS report. on Wednesday of importance to us is Eurozone retail sales. Ooh, that's not, here we can see it right here. Not one, slightly better than last time, but I'm not convinced yet. We'll see in Polish interest rate decision. Thursday is of importance to us, FOMC, RBNZ interest rate decision, Canadian housing starts, and Chinese trade balance. And as you can see, the Chinese trade balance is quite important. Over here, expected at 31.7 yachts. A yacht is $1 billion. And on Friday, Chinese CPI and UK GDP and US PPI as the most important ones. And we will go into the slides now to have a closer look at these events. If I can do this, hang on a second. Here we go. All right, week ahead. What's on the docket? FOMC, obviously quite important. Thursday, FOMC, but no press conference. The bank is expected to leave the rate unchanged at 2.25. So next hike, December meeting, plus 25 basis points. Tuesday of midterms. No press conference, no update on economic projections. Focus. What is the market focusing on? We will be focusing on the Fed mentioning the recent equity sell-off or not. Minus 8% since this, September. Not bad. Not bad. So it's going to be of interest if the Fed will allude to that. Then will they mention the recent data hinting at a slowdown in economic growth? That is a little bit worrisome, especially if consumer confidence starts coming off. Keep an eye on that and on the leading indicators. And will there be mention of the state of current financial conditions? Because the conditions are not tightening yet. We still have loose financial conditions, despite the hikes. The expectation, though, is for an upbeat statement. So, guys, if it isn't upbeat, expect dollar weakness. Yeah, very simple to trade. In terms of the midterms, the current market expects, priced in by 60%, that the Republicans will retain the Senate, because there's only 35 seats in the Senate up for vote, and only 8 of those for Democrats. So that's the most likely scenario. But the Democrats taking the House. Now, Trump and his crew are hitting the campaign trail hard. There's lots of advertisements going out in the US. It's going to probably be a close race, but that's what's being priced in right now. If that turns out to be that way, Nico, listen up. We'll have a very dysfunctional administration over there with lots of last-minute deals and gridlocks. It's going to suck. The market is going to hate it. If the Republicans remain control of Senate and the House, then expect a relief rally. Very simple to trade, okay? In terms of Aussie RBA, of course, the RBA is expected to keep the rate at 1.5, which they've kept it at since August of 16. Also expect the following phrase. In the statement, we think that they're going to repeat the phrase, further progress in reducing unemployment and having inflation return to target is expected, although this progress is likely to be gradual. Any change in wording there will be a reaction in the market, in the currency. RBA is expected in August that the underlying inflation would temporarily fall to 1.75, which it did, and hence it's justified that the RBA remains on hold. Currently, the market expects the first rate hike to not take place until early 2021, if at all, okay? So nothing going on over there in terms of rate hike expectations. Friday statement on monetary policy. That's going to be important. The expectation is for the RBA to remain upbeat on its GDP growth rate view of 3.25% for both 18 and 19, and for the unemployment rate forecast to drop below 5%. It's expected to drop to 4.75% by 2020. Also, inflation is likely to rise in 2019 and 2020, which I subscribe to now. Why? Because of the rise in input costs. PPIs are rising in all Western economies. Okay, that's the Aussie dollar RBA. Over to the Kiwi and RBNZ. That's on Wednesday, and here as well, the market expects no rate change. They're going to keep it at 175, but it's going to be the last meeting for this year. The next one is not until February 2019, and there is tons of economic data until February 19. So the Kiwi starts interesting me. Why? because horrible economic numbers of late, until we saw GDP for the second quarter come in at 1% versus 0.8 expected. And CPI numbers recently for the third quarter came in at 0.9 versus 0.7 expected. So both surprised to the upside. I like that. I like that. Problem, very weak business confidence reading due to, you guessed it, rising costs. Every PMI states the same thing. Costs are rising, and that's due to the trade war. So the weak business confidence is something that the RBNZ has on the radar, but they're saying, you know what? It's not affecting business investments. And as long as it's not real life effect, has no real life effect on business investments, we're cool with that. And so am I. So the market expects the first rate hike around the fourth quarter of next year, 2019. So if we look at that, I'm actually noticing a very severe, significant, extreme positioning by the buy side in the Kiwi, and I'm expecting it to bounce. All right, over and on we go to the pound. Monday, we had services PMI. Just now, this morning, came in softer than expected with 52.2 versus 53.4. Manufacturing PMI last week also printed below expectation. Only construction came in better. But within the construction PMI, we saw that business expectations were slumping to their lowest level since December of 2012. So there's some underlying weakness in the development of the UK economy. And that, please, guys, beware. This is of importance to us. Eisner, one of the portfolio managers known from the movie The Big Short, which if you haven't watched it, I highly suggest you watch. It's an awesome movie. Loved it. Depicts pretty much what happened in real life in 2008. I was there live with Lehman Brothers. So Eisner is shorting two very weak UK banks in expectation of a bad Brexit scenario. And he's going to short the shit out of the UK if Corbyn were ever to become the political leader over there. And I will join him. If the socialists take over, it's game over there. So notice some weaker economic growth happening in the UK right now. That is of interest to me. So Friday preliminary GDP, quarter on quarter expected to come in stronger than last time with 60 basis points versus 40. That takes the year on year to 1.5 versus 1.2 last. That's all good. Household consumption and investment are expected to have been the major contributors to this third quarter growth in GDP. But, and here comes the but for my traders, the BOE already knows that. They already know it, and they expect growth in the fourth quarter to fall back down to 30 basis points. And on Brexit, they clearly communicated that they have a wait and see approach. So I was looking to long the pound this week, and I'm not doing it. The economic scenario, I need to look at the data. I don't want to long the pound given the current situation. Also, Friday, we have manufacturing production. That's coming in a little bit stronger. On the other hand, industrial production is expected to come in a little bit weaker. So it's a difficult scenario right now. Pound volatility increases. So if you trade the pound, increase your stops, guys. Last but not least, I think, yes, no, oh, that's it already. Okay. So in terms of positioning, commitment of traders are giving us a long signal in the Aussie and in the Kiwi. Thank you very much. Volatility, euro came off a little bit. Pound increased. I just said that. Yen decreased and the VIX decreased. Good to go. Option pricing this morning gave us a bullish scenario for long euro dollar, long Aussie dollar, long euro Swissy, and long gold. What's happening this morning? Aussie is seeing some strength. Pound is seeing some strength. New Zealand dollar is seeing some strength. Bearish for Monday, dollar versus Canadian dollar. Nah, happening a little bit, not much to talk about. Option flows bullish for this Monday morning. Aussie, pound, Canadian dollar, euro, yen, and gold. Bearish only the Swissy. Actually suits my fundamental picture for the Swissy at the moment. Potential trade this week. Potential trade this week. I thought long and hard. I really wanted to short euro pound. Can't do it. Pound is just, it sucks. Economic numbers not accordingly strong. So I kept thinking, what can we do Dollar long again, doesn't really make sense, could make sense, but the Dixie at 96.50, not really happening much. Midterms, also very volatile. Great as an intraday trader, shitty for me to give you guys a swing trade that's gonna suck. So let's look over to the antipodens. I'm going to learn how to pronounce that correctly. I'm shorting the Euro New Zealand off of top edges. Unfortunately, there are no top edges at the moment because the short accumulation by my colleagues over in the banks and funds has already taken place. But maybe we'll get into the trade. So I just hit the sell button this morning. Why? Expectation for weak economic numbers out of the euro for this week once again. Plus we have the economic ministers are meeting for Italy, discussing Italy. We have some local political shift in terms of the league, getting more support over there. The Italian government not at all wanting to make any amendments to their budget. This is going to get interesting. We are still at Italy, Euro, Italy, we're still at, well, I can't change it, but I still expect the 4% spread in the 10-year yield differential to get tested eventually. Plus, we had last week the talk of TLTRO being reintroduced via the ECB to rescue Italian banks. Recall that Italian banks alone have 256 billion of non-performing loans on the book. So the drama there is not over. It's not even started yet. It's going to be very interesting. So to me, euro only short in terms of swing and position trading. Kiwi, we have the RBNZ and we have a technical bounce in terms of positioning because we have an extreme short from the sell side, and I expect dealers to move against that. Risk for my trade is that the euro econ numbers were to surprise on the upside, and or we have some positive Brexit news, and or we have weaker economic numbers out of New Zealand, and or we would have a dovish hold out of the RBNZ, which I don't currently expect, but we'll see. Here's the picture, short around 171.10. That was me this morning just hitting it. Take profit around 169.90, stop loss 171.83. Risk reward slightly below 1.5. So good to go. We see increasing volume on a dropping market. We see bottom right-hand hold, we call that, and it's going to be important what the market will do once we hit below that pink line. You could expect a bounce. If you want to be conservative, short the POC at around 171.40 if and when it gets to that. If you want to be ultra conservative, short around 119.75. Okay, guys? Now let's see. Question, Nico, how do you see the effect of the midterm elections to the euro and different outcomes? Thank you. Like I said, Nico, 60% probability priced in that the Republicans keep the Senate and the Democrats get the House. That means gridlock. That means euro dollar sideways. Want to sell RMB based on weekly perspective. Renminbi. You want to sell the renminbi. I like your thinking, VT. The problem is that we have seen the government in China stepping in and supporting the equity market. And we had, let me just get the number out real quick. 1 second, VT. 1 second. I just got to get the number out real quick. They did another 1 year medium-term loan facility for their banks at 3.3%. And God damn it, it's not working. I can't get the number right now. Okay, so what I'm trying to say, I can't find the number right now because my program got stuck again. Be careful because here we go. I got it now. Be careful because the government is stepping in to support, and so far they said that they're not looking to use their currency or their treasury holdings as a weapon in the trade war. Nevertheless, if you want to do that, short top edges in dollar renminbi, please. Okay, VT? Should work out for you well that way. If the expectation is a soft GDP in the future, should one look for a stronger FTSE? That's correct, Manfred. That's exactly right. There's a very high correlation because most of the companies within the FTSE 100 actually generate their revenue in US dollars. There's a lot of oil names in there, so that means it's an island, right? So every time you have a very weak pound, you see a strong FTSE and vice versa. It's the same for the Japanese yen, my friend. Which time frame are these trades? 2 to 3 days. Usually that the dollar Swissy is still up and running. Oh, look, it's still long dollar Swissy. I need to change that real quick. Good question, Slatko. Average holding time is 2 to 3 days. But this trade from last week is still on the books right now. But that is the first time that we had that. Yuan ETF. Okay, Nico. ETF. Okay, if you wanted to short the ETF, go for it. Go for it. Makes sense, but off of top edges. That is probably not updated. Thanks, AN. I just saw that. Okay, no more questions. In that case, guys, it's going to be an interesting week. If you're an intraday trader, you should be able to make good money. If you're a swing trader, have a look at this trade suggestion. Also euro dollar short off of top edges. But again, sometimes you want to stay away from those currencies and those markets that have very high political risks if you are full-time employed and not sitting in front of the screens all day long, because you might have the direction correct, but the pros will squeeze you out of your trade, trigger your stop loss, and then go in the direction that you were rightfully anticipating. Okay? Thank you for your questions. Great turn up this morning. I think this is the largest number of traders we've had ever this morning. So I appreciate that you guys are coming in. I know I talk fast, but I want to get as much information in as possible. You can always watch the webinar rerun later online. Thank you very much, and I'll see you all next week. And thank you, Jens. Bye-bye.
Thank you, Jay. Tomorrow is another day, 5 days a week, 5 different trading styles and 5 different traders. If you like Jay's style, Monday next week. If you like another style, tomorrow is a new chance. Thanks. Greetings from Berlin office. And like Jay said, a couple of hours later will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Greetings from Berlin office. Bye-bye.